Want my latest market insights? My latest report, Market is Getting Nervous, is now available. Scan this QR code or click on the link in the description. Hey, good morning, everyone. Happy Friday. Especially for those short, obviously. You wouldn't think there would be so much drama just because the growth scare pierced this 2.3 ratio that I have been stuck on like glue. Anyway, it did. So NVIDIA goes up, NVIDIA goes down. The whole ecosystem of AI bubble gets questioned. The narrative starts turning. You start getting opinion pieces in the Wall Street Journal and Bloomberg and Financial Times, and boom, lots and lots and lots of de-risking. But it started earlier. Breadth started breaking down in September. The $0 club plays started rolling over in October. They pick up speed. Obviously, it starts with a little bit of protection and then profit taking and then selling and then forced selling. And today we got the forced selling. So you can see over here, just to kind of review, we're on some good levels of support actually. So we're right back to 666 for SPY. LOL. Like I literally just wrote on Wednesday morning that big picture into year end, I see us chopping around SPX 6666. We've been there. If you look on a big picture, we have been there. We just keep going back, overshooting it, coming back up, going back to it. I think we're going to be there all into the end of the year. That's what's going to really hurt a lot of folks that were positioned. Remember the upside calls? Remember that post I did? Too much of a good thing? That was a few weeks ago where everybody's hammering calls on the upside. So now that we're here, we're back to 666 in SPY. We've come back down to 600 in the Qs. I had mentioned yesterday, and then again Tuesday also, SPX needed to break 6807 in order to trigger selling. And then yesterday, Thursday morning, before the selling really picked up, I said this is a nice head and shoulders, and measured move is 605. So I gave you 6700 right here for the E-minis. We are right here. Look at that. 6695. Close enough for whatever, union work, government work, I forget the expression. All right, that's where I saw it going. That's a little overshoot, but you get the point. We had 605 as a measured move on this head and shoulder on the 2 hours, which basically I said was 605. I can show you what I pointed to at that immediate time right here. So this is where we were, started selling, and I said this is 605 area. Well, we overshot to 600, and we obviously got back down in SPY. So this was yesterday, and it was all by Friday. Head and shoulders on a 2 hour, 605 measured move. We overshot to 600. They're going to monetize puts here. SPX breaks 6807, and we fall back into that 6666 area. The SPY is back into 666 area, but this was the level I gave you, 667. Same idea. You can see this given yesterday, 667. So I think that is it for today. I think they'll monetize some puts today. Oil is still, crude is still 60 handle, not doing too much. Yields are still 4.1 handle, not doing too much. Dollar did come back down, got the gold bulls very excited. And what did I say? I think it's going to top out. I also had a webinar with Jason on Wednesday at 2 o'clock. And I said, can you do me a favor? I think we're going to top out in this pop in gold. What do you see from option flow? And he saw the exact same thing. So I also yesterday reminded, when we get a volatility surge, because client Jose warned us early and often, we get a volatility surge, gold is a collateral trade. It dumps. Silver dumps. Look at this, all the way back down. If you were just getting excited about the gold and silver trade, I said, I think it's going to go more sideways than breakout. We'll have to wait to the end of the week. But if we get this volatility surge, gold and silver will come back in. And they crashed back down with the market. So you can see assets, boom, Qs, SPY. You can see gold. Silver looks the same way. Macro's not doing too much. Dollar, yields, and oil. Just ignore them for now. This is all de-risking on that $0 club unwind trade that is so crystal clear. This is silver. Couldn't get above 48, came right back in. What's it going to do? Likely fill this gap fill. Actually, I'm going to do this. I'm going to get rid of this. There you go. It's going to come down to 44.36 area. Okay. So we've got GLD also breaking back down. This is when volatility gets really busy. Metals will also get hit. Now I can't see SPX yet. but we already triggered that 6807. I was live going, okay, that looks great. Let's get it back down to 6700. Obviously, we overshot. That's pretty clear. We'll get all this stuff open. But the one that I really, really want to highlight was this. And I talked about this on Tuesday. I said, this looks exhausted. This is just looking like a dump that's ready to happen. So, and it started. There's Monday. There's where I warned. Tuesday. There's your Wednesday. There's your Thursday. And here's Friday. 37.34. Where are we? Exactly. So we should have some monetization here of these puts. Just a big picture. Then I also warned just yesterday that it looks like these are starting to peter out, but they're still really strong. These are the memory plays. So that hadn't started so much in earnest. But NVIDIA short, gorgeous. Pre-market, we're at 182. It's still stronger than most. We can head back down to the 100. Palantir, same idea. Came all the way down to 165. What is that? Basically the 100. So these have already started down. Apple didn't fall very much. It really was down 0.19% yesterday. That's it. I said, this is not worth your time to short. Meta had already been a short. Spotify had already been a short. Netflix had already been a short. Those three didn't move very much. So I think that was good timing on be careful of the metals extravaganza. And then yesterday I posted a whole bunch. By the way, this is not very much of a ratio breakdown. Just saying. All right, so this is from Tuesday. The WGMI Bitcoin miner data center hype plays are nicely rolling over. Tons of them. I mean, just, it doesn't matter. They all went. Throw up time. That app swing initiated. It's doing great. I said it would take a few weeks to get back to 511. Well, maybe it's happening a little bit faster, but these are the levels I gave on Tuesday. There's Hood as well. And ASTS Protect, we're already down to that 58, pretty close. NVIDIA Chase short. We went live over a ton of stuff. Remember the XLF? So many are like, wow, this is a gap down. It should get bought. It should monetize. We should go right back up to all-time highs. And I just remind last week, I said, I actually think that this is not the bottom. I think that this pullback, which right now looks very choppy, is only half of this ultimate pullback. In other words, we have from SPX and QQQ all-time highs, we are still only down. All we're doing is revisiting last week's pullback. That's it. We're still only down 6% and 4%. I think this still has a double ahead of it. Does that make sense? And then big picture, when we were talking about year end, everyone is so bullish. I'm like, I can see we're just going to chop around 666. So give or take 250 points. We've made it back up twice now. And then how many times have we tagged 6666? Somebody do that on a daily. Oh my God, we have just been here since September. No joke, since September, October, November. That's 3 months of sideways. And we can go up another 250, down another 250, but we're just going sideways, big picture. So kind of keep that in perspective. I did a follow-up last night, and this is something you can read. Hopefully I will get right to the market and your questions, but this is a proper growth tech scare. And that's why I said yesterday, why I'm not in a hurry to go long. I said I would not be in a hurry to go long. Goldman did its high beta pair trade, blah, blah, blah. It was the second worst day since DeepSeek. Anyway, that's the theme. Again, just a warning. Right now, I think we're going to have monetization this morning, but big picture, after the bounce, I think we're just going to go right back ricochet rabbit to 6666. And I think we're going to be bouncing about there. NVIDIA probably does fine for earnings, just like Applied Material did this morning, beating. Doesn't matter. They sold it off aggressively. So just keep in mind, we're going into a very highly charged emotionally and financially season of the holidays. And they also just announced that they're not going to be releasing the data for U.S. Commerce Department says October personal income spending and PCE inflation, because we didn't get it today, will be released on November 26th at 10 a.m. The U.S. GDP second reading to be released November 26th at 8:30 a.m. And the Secretary of Labor says September jobs, not even October, will be released next week, but the BLS was not able to collect October CPI or jobs data. So we still have that situation where we may not get it ever. Anyway, what I wanted to say is I did a write-up that I think is very, very important. And so I'm focused on the CDS blowout, which is making the rounds. But just remember, sometimes that can be early investors hedging their bets and then they unwind it, make some money. It's not our retail trade at all. But just kind of keep in mind, the tricky part is figuring out their motivations. And then when these cheap hedges get unwound, it's actually good. It's actually bullish bullish. So anyway, read this. I think it's important. And then of course, big picture. This is what I'm worried about. This is what Jeffrey's worried about. You get a collateral crunch. I'm not just talking US Treasuries. I'm talking Oracle bonds. And then you come into a credit crunch. So this is what yesterday afternoon had me transfixed on this podcast that Alex shared, as well as another podcast that Jeffrey shared, and LaDuc pointing very strongly, firmly to the systemic risk will come from private credit. So right now, getting back to the growth scare we have underway, most are expecting all that new high stuff, but I still think we're going to get a chop. And I really hope that this timing and all this prolific writing, like, oh my God, head cold or not, I was busy. So hopefully you got your wits about you on this particular move. We are definitely in scary Friday morning. Is the bottom going to fall out? A lot of this is forced selling. And how do I know? Look at the gold. Look at that Head and Shoulders gold. Forced selling as a collateral trade. Last in, first out. Look at all of the carnage that's in that growth tech rotation. I mean, it is sold to you. That's why I wrote that post, bear market rallies. And everyone's like, oh no. I'm like, oh yeah. So this is why breadth creates that air pocket of risk when it breaks down, that triggers an air pocket of risk. Generals look over their shoulders and say, what the hell where are they? Then that triggers, and then you have some last in, first out going bye-bye, and then you've got some others going, ooh, maybe we should take some profits, and then you've got some others that are absolutely leveraged to the hilt. They just came in heavy, and they're going to get the heck out of Dodge because they're going to screw up their portfolio into year end. This happens like every year, like clockwork. The hedge fund factor rotation that was, I said, would go until the end of October and then stop. All that tax loss selling, and then it moves into the year-end FOMO chasing. This is very typical. It would not surprise me to get some settling of this space. Look where we are. This was Friday where we hit perfectly that 66.50 price target that I gave. We bounced, formed a Head and Shoulders. Now we're right back down through, oh, sorry, I'm on Qs. It was 66.50 was for SPX, and I sometimes forget that I'm looking at Qs and SPY, not SPX. So let's go look at that. Anyway, here you go. Gold is right back where it started. Why I said sideways. We're right back where we were, and they have not monetized yet, but give them a few minutes. Let's see what happens.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.